Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. Well, folks, nothing major to report on the market and the prices. Bitcoin is still consolidating, still trying to find its way upwards to break that all-time high it set a couple weeks ago, and we just have to be patient. Some altcoins are popping off, of course. We're seeing Dogecoin on the move really strong. It is currently holding the number 8 spot at 22 cents. So meme coins are still moving, but we're looking for other altcoins like Cardano, XRP, and HBAR to move. So we got to be patient and let Bitcoin do its thing. As I've been stating, I'm hoping we enter April with a lot of bullish momentum as the halving is approaching, and we can see some fireworks, folks. But today, the big news was that Sam Bankman-Fried, former FTX CEO, was sentenced to 25 years for defrauding investors.
They put you in jail right away. No trial, no nothing.
We know Sam Bankman-Fried is a fraud. He's an old-fashioned crook, just stealing money. He was taking customer funds, commingling it, sending it to his BS Alameda research trading firm, being run by his friends who were not professional traders at all, who are losing tons and tons of money. So pretty pathetic setup. This had nothing to do with crypto and the ethos of crypto. This was just old-fashioned fraud, just like what Bernie Madoff did, right? Sam did a lot of marketing. They tried to position the FTX brand in a very nice way. So there was a very nice facade, but behind the scenes, doing all kinds of nonsense and breaking the law. So many folks were expecting him to get 50 years, some 40, 30, but he ended up getting 25. So I think he got off pretty light here, all things considered. But the important thing is, guys, we are putting this to bed, and that is customers are going to get their money back. That's important. And Sam Bankman-Fried is going to go to jail. So we can put this behind us and keep moving forward. But it seems like the market already is kind of not even caring about this in a sense of price movement. So it's a big 180 from what took place in December of 2022. Now, Tiffany Fong, who has been in contact with Sam Bankman-Fried since the 2022 debacle, and she's been covering him and his story. She's had interviews with him and so forth. She said he's going to be in a prison in a medium or low security facility as close to the San Francisco Bay Area as possible. So we'll see where he ends up. But she did a great job covering the trial. Now, something that really stands out like a sore thumb here, and Jake Tversky reported on it. He said, if you're following all the news about SBF today, take one moment to reflect on Ross Ulbricht. SBF got 25 years. That's a long time, but he'll get out and have a life left afterward. Ross Ulbricht got 2 life sentences plus 40 years. This is not justice. So Ross, as you all know, is a creator of Silk Road, and he got certain charges, and they threw the book at him, right? But you compare it to what he did versus Sam Bankman-Fried, the sentencing should be reversed. But we know SBF, he's got political connections, a lot of money donated to politicians, and his parents are well connected to people in DC. So I think all of that played a role in him getting a very light sentence. And I think he's going to be up for parole after 20 years. So he's going to get out at some point, but clearly not fair. And one could argue, look, the issue that took place with Ross was in the very early days of crypto. So they threw the book at him, right? This was all new. They had knee-jerk reactions. So now the crypto market has matured. Bitcoin is part of ETFs on Wall Street. So there's not as much fear or stigma around it. It's more understood now. So I think that's part of the disparity, but they got to get Ross out of jail, man. This sentence they gave him was really crazy. So I interviewed Ross's mom a couple of years back, and they're fighting the good fight to try to get him out. Don't get me wrong. I'm not saying he shouldn't have gone to jail. He should have, but the sentencing is obviously overreach, right? It's outlandish. They need to address this and fix it, and hopefully they will. Now, we got some news here that Bitwise is throwing its hat in the ring for the Ethereum Spot ETF. James Seyfert of Bloomberg is reporting that they filed their S1 for the Ethereum Spot ETF. So the Ethereum Spot ETF race is heating up just like it did for Bitcoin. The only challenge is This is a very different asset from Bitcoin with many layers of complication. And it goes back to Bill Hinman, goes back to what Gary Gensler's doing now with Prometheum. It is very complex, guys. So we'll see what happens. But look, the folks at Bloomberg, Eric Balchunas is here. He's saying he remains pessimistic that an approval will come in May. The deadline is May 23rd for the SEC. And we saw the SEC already delayed many Ethereum spot ETFs. So we'll see what happens. He said there's 7 weeks till deadline and radio silence from the SEC equals bleak. So they want the approval, but it's not looking good. There's a lot of complications here, and we've been covering it here on the podcast, talking about the CFTC, Prometheum, and much more. So we'll see what happens. Congress has to act, man. They got to get something done because scumbag regulator Gary Gensler is out of control. Now, speaking of Ethereum, Vitalik Buterin discusses what is next for Ethereum following the Dencin hard fork. So Ethereum co-founder Vitalik Buterin believes that following the Dencin hard fork, scaling on Ethereum is no longer a 0 to 1 problem, but rather a 1 to n problem. Initially, Ethereum's development was centered around building its foundational infrastructure, effectively going from non-existence, 0, to establishing the baseline of a functional ecosystem, 1. This phase was marked by significant challenges like limited scalability and high transaction fees. These issues constrained Ethereum's ability to support widespread adoption of decentralized apps and maintain operational efficiency. Following the Dencin update, Ethereum has pivoted to a more scalable infrastructure, highlighted by innovations such as proto-dank sharding and, importantly, blobs for more efficient data handling and notably lower transaction costs. These advancements mark a transition from laying down the network's foundational framework to enhancing and broadening its capabilities. Developers will now work to scale from a solid baseline 1 to new, undefined heights represented as n, an indefinite but foreseeably large number. So this is good news. And this is why we have so many Ethereum layer 2s, because Ethereum has had an issue with scaling, speed, transaction fees. I mean, it's ridiculous, the gas fees, right? But they seem to be working on this and trying to fix it. But I want to see it, right? Because there's been so many talks over the years. So we need to see it. But don't get me wrong, Ethereum is getting adoption. Many enterprises and institutions are building on it. Just look at BlackRock, right? They're tokenizing investment funds on it, and they got $240 million for that tokenization of that fund. The news was reported by Bloomberg today. So some of you may be scratching your heads like, well, why would these institutions want to use it? Well, I think they're using Ethereum as a testing ground, and they view the network, despite the high fees, as very secure, because security is very important for these enterprises. So they're using it, but we have to wait and see after they've done all their piloting and concept tests and much more, which actual blockchains will they use? Will they move to Cardano? Will they move to Avalanche, right? And all the competitors out there that are smart contract based? This is the question. Or to layer 2s on Ethereum, right? Just look at what Base is doing, Coinbase, and their Base layer 2. So good statements here from Vitalik, and it seems like we got progress, but got to lower those fees, got to speed up the transactions and much more. Now, guys, the Bitcoin halving is, of course, in April. It's currently targeting April 19th, and this can be adjusted based on how miners perform. So the Bitcoin halving is just weeks away. Here's how miners have prepared. Public mining companies have been acquiring sites, refreshing machine fleets, and diversifying business models in preparation for the event. Pre-block mining rewards are set to drop from 6.25 Bitcoin to 3.125 Bitcoin on or around April 20th. Such an event occurs roughly every 4 years. While some industry players are expected to struggle, other firms have made it clear they intend to take advantage of buying opportunities and set themselves up for future growth. So, folks, there's a huge demand for Bitcoin, especially with these ETFs live, and you got all these major Wall Street firms trying to buy up as many Bitcoin as possible. So as a miner, you want to mine as much as you can before the rewards get cut in half at the halving, and then the difficulty rate will increase as well. So mining will become much more difficult. So you may see some of these Bitcoin miners go out of business, and the ones that are set up for the long haul do well. So don't be surprised by that, folks, especially when the next bear market comes back, because once again, it's going to be much more difficult, much more competitive to mine and to get these Bitcoins. But that's a feature of Bitcoin, and it's deflationary, not inflationary. And the best miners will be able to win here. So there's talks of acquiring sites. So while a bunch of larger mining companies have signaled the intent to be opportunistic in a post-halving world, some have already started to buy properties. Compass Point Research and trading analyst Joe Flynn has referred to Marathon Digital as the 800-pound gorilla in the mining space. Indeed, the company sported an energized hash rate of 28.7 exahashes per second as of February 29th and has no plans to slow down. So the company closed its acquisition of 2 mining facilities in Texas and Nebraska in January. Marathon more recently revealed its intent to buy a Texas Bitcoin mining facility owned by Applied Digital for roughly $87 million. CleanSpark has bought facilities this year, completing its acquisition of 3 data centers in Mississippi last month. Incredible, folks. Bitfarms bought land in Guazú, Paraguay, if I'm saying that right, in January for a planned 100 megawatt facility. And they're, of course, updating their mining fleet, the machines, and so forth. So, guys, it's go time for these miners. They are preparing for the halving. And like I said, I gave you the reasons why, and there's high demand. So there's money to be made here as this asset class goes mainstream via the Wall Street Bitcoin ETF. So exciting times. And Plan B, he shared his updated Bitcoin daily stock to flow and price. He said the S2F doesn't care. Halving is coming. So, folks, historically, we've seen the halving be a massive trigger for the bull run. Bitcoin, though, is ahead of schedule. It is running to new all-time highs ahead of the halving. This is the first time it's happening in history. So I'm excited for the remainder of this bull market, guys. I think we're going to see more fireworks this year. My hope is that the blow off top happens this year because we get to take profits sooner than later, but it could spill over into 2025. I still have the thesis that with the rate cuts that are coming, markets may be front running these rate cuts because historically there's a pullback at that time. The data shows that. Now, that doesn't mean it has to repeat the same way, but history tells us the rate cuts usually happen when something is breaking and the markets start to correct. So maybe markets are front running this. So have your cash out plan and know what price targets you're going to be taking profits at, folks. All right, folks, quick word from our sponsor. That is VeChain. VeChain is one of the top layer 1 enterprise level blockchains out there, working with BMW, PwC, Boston Consulting Group, Walmart China, and much more, building incredible Web3 applications and much more. VeChain is a very fast and secure blockchain. They use low energy and they're getting a huge enterprise adoption, folks. I've been a VET token holder for years. So if you'd like to learn more about VeChain, visit vechain.org, link in the description. Also, there's news here that Grayscale highlighted VeChain in their utilities and services report. So that's really great. Many investors and industry folks are recognizing VeChain as one of the top blockchains for utility. So that's the news, folks. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, hit the 5-star rating, subscribe to our free email newsletter, link in the description. Follow us on all social platforms, Facebook, LinkedIn, X, TikTok, Instagram, and much more. Thank you for watching. Thank you for listening, and I'll talk to you all later.